The Indian rupee has fallen to record lows this week. Interestingly, keeping the rupee company in terms of depreciation in 2025 are Argentina and Turkey, where inflation is more than 30%, but both have fared worse compared to the rupee. The rupee is also declining at a time when the dollar index is weakening. The dollar index is down nearly 10% so far this year, and the rupee is down over 3% in the same period. Now, one of the key reasons for the fall in the rupee is the rapid outflow of foreign funds from India. More than $21 billion have been pulled out in the last 12 months, making India the least favoured emerging market for foreign flows. Indian stocks have underperformed global peers so far in 2025 with just 2% returns, but other asset classes are booming, with commodities like gold and silver in particular seeing a spectacular rally. Now, weak rupee is not necessarily all bad. It can help exporters offset some of the impact of the 50% US tariffs. It could also bolster remittances from abroad. So how low will the rupee go? The government does not seem overly concerned at this point in time. Before I bring in our team of editors, here's the Chief Economic Advisor, Anantha Nageshwaran, on the weakness in the rupee. As I pointed out, he doesn't see the current levels as a key risk. Take a look.
I'm not too concerned about the rupee's current sort of recent weakness or the current levels per se. It's all right. Obviously, we have ample foreign exchange reserves and we have very low external debt. So it's not that the rupee is vulnerable in any particular manner. It is just maybe the current demand for dollars or the reduction in the inflows on the portfolio side may have contributed to this weakness. So I'm not worried about the
And does it actually also help offset some of the,
exactly,
at least as far as the exporters are concerned?
To a limited extent, it's actually a good thing because if the Indian rupee is depreciating on the back of a depreciating dollar, it does impart a certain competitiveness in the near term. But of course, anything that is overdone will be a challenge. But that is not something we are facing right now.
Well, that is the Chief Economic Advisor saying don't see the decline in the rupee as a key risk at this point in time. And we'll get to the competitiveness aspect in just a second as well. But let me welcome on the editor's playbook, Latha, Prashant, Nimesh, Surbhi and Sriram. But first up, our in-house governor. Latha, what's going on as far as the rupee is concerned? And the big question on the street, how low will the rupee go?
Well, if you only want a poll of what economists believe, most of them think that 89 is a good level. It's a round figure which the Reserve Bank will protect. And perhaps you will hear the odd 89.50. But most of them are telling you that the bad news is already in the price. There isn't much to go. Even those who speak about 89 or 89.50 will normally tell you that by March, that is fiscal year end, you may see it appreciate back to about 88. The broad range in the market is 87 to 89.
Yeah, and imagine this kind of... No, I was just saying, Shireen...
No, I was just going to say that at the CII town hall yesterday, and we had 80-plus CEOs, that was pretty much the consensus there, even when I polled CEOs on where they expect the currency to be. In the current band is what the majority voted, even at that CII town hall that we did yesterday. But Latha, we took our viewers and the audience through what the Chief Economic Advisor had to say. But really, what do you attribute the decline? One of the key reasons for the decline that we are seeing at this point in time, as I pointed out, it's Turkey and Argentina, but they're sitting on inflation at 30%. We don't have an inflation problem at this point in time. Okay, we've seen foreign outflows, but what really is weighing on the currency?
Well, first of all, there is the near flow problem. As you pointed out, record outflows in terms of, foreign capital. We have seen outflows of this, nature or even higher during the taper tantrum and before that during the Lehman crisis. So we should not forget that this is nothing like that as far as our macros are concerned. During the taper tantrum, our current account deficit was 5%. In fact, the last quarter, it was even more than that, the Jan-March quarter. We have now a current account deficit which is less than 1%, a historic low. So probably that is the point. It was too good to be true. For the last 30 years that I can remember, when the rupee became a marketable, a marketized currency, the current account deficit has been 2 to 2.5%. This 1 year, it was 0.5%. So clearly, all over the world, governments are worried that too much is being outsourced. So we should expect some kind of a mean reversion. I wouldn't worry till the current account deficit is 2%.
Shireen, I was just adding, what I was saying was that imagine we're talking about levels of 89 and some predicting 89.50, as Lata is saying, at a time when A, she's pointing out our macros have been solid, and B, look at the dollar index. I mean, it's not as if the dollar has skyrocketed and therefore currencies are falling and the rupee is falling. The dollar index, the DXY is down 10%. I mean, from January, the DXY was at about 110, and today it's at 97. And, then we have this depreciation.
That's what most analysts will point out, that we are at bigger historic lows compared to the euro versus several other currencies. And by the way, we are at a historic low versus the renminbi. Until very recently, it used to be 10 rupees or 11 rupees to buy a renminbi. Today, it is 12 rupees 48 paise. So, some of this is, as the CEA pointed out, working to our advantage because, that makes Chinese imports expensive. Yeah. Forget about exports. We always tend to mistake that, it makes our exports attractive. That is the least of the problem. The advantage is that it's a natural tariff barrier for the domestic industry.
For example, the steel.
Steel, absolutely. Why did steel stocks go up yesterday, day before? Primarily because there is an advantage. But I don't think you'll catch the governor saying that he's okay with the rupee depreciation. You don't say that because it becomes self-fulfilling.
On that point, on what the governor may or may not say publicly, let me go across to Prashant because he's been putting this data together. And there seems to be a change in stance, in position, as far as the RBI's intervention in the rupee market is concerned. And we were just looking at that. Prashant, in the Shaktikanta Das era, the RBI was much more aggressive in its intervention, was it not?
It was, Shireen. And so I just looked at these two periods and forgive me if I'm picking out extremes of both periods just to kind of sort of contrast and make a point. But I think it still makes sense because I think the contrast is very much there. Although I think, the current governor is he's only taken charge in December 2024.
10 months old.
And Governor Das, was at the helm of things for 6 years, right? So, under Governor Das, the dollar index went from 96 to 106. Now, this is point to point. I think 2022, we also saw 113, 114 kind of levels. So, but this is just point to point. So, but you've got to live through this point to point, right? And that's what we're doing right now. The policy was clear. Maintain low volatility in the rupee. And of course, the RBI used to aggressively intervene to curb rupee fall during periods of dollar appreciation and vice versa as well, on both sides. Now, this policy of maintaining stability in the rupee actually reached its peak, if you remember, during October to December 2024. This is when US elections, etc. were taking place. The dollar index saw a 10% jump, October to December 2024. And that is the period when RBI intervened, sold dollars heavily, and the headline reserves at the RBI declined $110 billion during this period. And this is both spot and forward positions combined, $110 billion in this period, right? But as a consequence of that, money market rates moved about 200 basis points above policy rates. That essentially, it was like a follow-on effect. It tightened credit conditions, and all of us have sort of spoken to companies during that period. And of course, it led to the cyclical slowdown, which some would say we are kind of sort of still unwinding as of now. Now let's come to Governor Malhotra, and I think right as Lata and we've spoken about this as well. As soon as he took over, there was this. One of the first things was, will he kind of sort of, is there going to be a change in policy with regards to the rupee, right? So far, if you look at point to point again, right? Governor Das left off at $106 index. All that has happened in the last 10 months, from 106, we've just come down to 98. In that 6-year period, we moved from 98 to 106. In 10 months, we've come off from 106 to 90, back to about 98 where we are right now. The philosophy seems to be that, India, you mentioned Turkey, etc., right? The philosophy is India attracts growth capital and it's not interest rate sensitive money, carry money which comes in. So it is, so the focus very much is growth. And looks like the philosophy is let's not sacrifice growth for the sake of forex stability. And maybe that makes sense, right? External debt here for India is less than 20% of GDP. 2/3 of GDP, our GDP is domestic consumption. So it kind of makes sense. It is local consumption, which is the majority of the economy. And of course, consequently, RBI has done a lot. 100 basis point in rate cuts, injected a lot of liquidity into the system. but they've also been very tactical with sort of forex intervention. So I picked out a couple of things, and Lata can corroborate because I think she talks to more traders and dealers than I do in a year. In a day, she talks to more. But what I picked up is, they are, for example, in February, the RBI was in the market heavily, selling dollars. That is around the, I think, Liberation Day, etc., right? Then they went on the other side. So they've been very tactical. It's not as if they're not in the market. And even now they're there.
They were there yesterday, today.
Correct. They're there every day. And maybe large sums of money as well. But they're also coming in slightly at a wider level. Earlier it used to be, say, 10 paisa. Right? Now it's 40 paisa, 50 paisa. I mean, the threshold for them to allow the move in currency has also become larger in that sense. So I think it's interesting that that is what they're doing, and I think
points I want to do this thing. So one is that the dollar index that we keep talking about, and Lata ma'am, can you please correct me if I'm wrong? But in the last few years, the correlation between a dollar index and EM currencies, while directionally it's the same, but they have decoupled quite a bit. It doesn't. If dollar index falls 10%, doesn't mean that our currency will also fall 10%.
No, absolutely. No, absolutely. On the contrary, all Asian currencies are up 7-8%.
Correct, exactly.
Versus the dollar.
Yeah.
Just a little bit in terms of trying to correlate regimes. The Shaktikanta regime held currency only for those 3 months, September, October, November types. Because in October, the Indian inflation was 6.8%, above the 6% mark. You don't want imports to become expensive at that time. So the same Shaktikanta regime 2 years ago in 22 had allowed 11% depreciation of the currency in a year. So, it's different. When inflation is very low, you don't mind the currency depreciating.
Also,
Imports will become expensive.
And in October, we had $10 billion of FPI outflows along
So
with...
they had to be a little different.
And Governor Malhotra
Short point is, I think, much will depend on the RBI's forecast. It's not today's flows. If they are okay with the rupee depreciation now because they believe that this is temporary, trade, even the CEA said he expects a trade resolution.
I think that's the only thing to try. I mean, for going forward, track the whereabouts of our Commerce Minister, Shireen. He's in the
Still in the US. Still in the US. He's very much there.
And if there is a deal which comes, I think that is squarely what people are focused on.
Check social media every day.
No, that's
every
She
hour.
said it. She said
Every
it.
hour, check social media.
Don't check anywhere, just check.
Just check social handles
I just want to make one more point
person's
about
Twitter handle.
the dollar index, right? Sriram, you made that point. 60% of the dollar index is the euro, right? Euro is appreciated. So actually, we're talking about the rupee against the dollar being down 3.5% year to date. I checked out numbers because the euro has gone up against the dollar. I checked out INR euro. You know how much it is? Rupee is down against the euro? 17% this year. 1.7. So against the GBP, British pound is down 11%. So it's actually the euro which has strengthened substantially. And that is the reason why you've got these...
Funnily, it is worse for euro that it has strengthened so much and for Japan than our weakness.
Don't take a holiday in Europe.
It's the hit. I mean, they folded too soon with Trump, and they will pay the price for it over a very long time. It was a deal with the devil.
But Shireen and everybody, the advantages of all this is up until 22, immediately after COVID, there was this burst of revenge travel. At that time, the amount of dollars we spent because Indians were holidaying abroad were huge because the euro and pound were not that expensive.
Yes.
So now there is another natural tariff barrier for Indians traveling abroad. Let's take a holiday in Sikkim.
I'm not so sure it's going to curb foreign travel. I'm not so sure it's going to curb foreign travel and get people to spend on travel.
On a more serious note, education outflows have definitely dwindled.
So you know how much is...
because of other reasons.
I'll have to confirm this. UK, the outflow on education from Indian students is $20 billion. $20 billion a year. That's UK. US will be much higher, right? We'll have to look at the numbers. I've heard. So I think all of that, because of what's happening, I mean, people are going to stay here, people are going to... And there are opportunities here in India for students to do that. It's a huge bill, actually. So, yeah, you're absolutely right, Lata.
I think the Reserve Bank's and the government's policy after the 1991 liberalization is markets find their level. They don't angst over the rupee that much because at a level, at 89 or 90, rupee will be attractive.
2013
and
was
so
a-
will the stocks be.
Exactly.
You know, both will be cheaper. So I think we are not at all at the taper tantrum or any angsting
no.
level where we have to take a capital account, step
actually, it's
of restricting. Nothing.
As people have said, macro-wise, I mean, actually, just sheer numbers. I mean, a pretty strong
Exactly.
position.
It doesn't actually get better as far as the macros are concerned.
Absolutely.
No, it does. It does.
But let's just move away from the rupee for just a second, because I want to get Nimesh into the conversation and look at what's happening in the equity market versus other asset classes. I mean, we've all been looking at the mouth-watering, jaw-dropping rally in gold and silver as well, which continues. But Nimesh, let's look at what's happening as far as the equities versus other asset classes are concerned. How do we stack up?
So, Shireen, it's very clear. A good macro doesn't mean a good market, right? I mean, that's been the old proverb, and that's how it proved to be. Look at what happened
China
to...
as an example for 20 years, right?
Exactly. No, and that's the point for India as well. Look at this year. Y2D, Nifty and Sensex are both flat. If you look at the US indices, they are up between 14 to 16%. So double-digit kind of gains for European indices, more than 20 to 30% gains for Asian indices. And even the European indices are up between 15 to 30%. So that's the kind of move we've seen across all the other emerging market, not only emerging market equities, but the global equities as well, as far as Indian performance is concerned. And this is even more shocking when you look at equity performance versus the commodities. The gold is up almost 42%, and this is Y2D dollar returns, right? 42%, 42% Y2D in dollar terms.
Yes.
Okay, if this is,
अरे, उसमें से 10% तो डॉलर का exchange rate है.
You know what?
No, that is in dollars.
That's what I'm saying.
Comex gold.
Okay, you're saying.
If that's the case, you know how much is silver up? 52%. Silver is a 52% Y2D in dollar terms. Forget that. Even copper, which is not a very tradable
This show was supposed to be about gold.
Still, even copper is up 17% Y2D in dollar terms. Yeah. So whether you look at commodities, whether you look at equities, global, local, Asia, India is relatively underperforming. That maybe explains the reason why it's not the favored destination as far as FI flows are concerned. It's very visible, right?
Shireen, with your permission, therefore, that question,
Yes.
How will the earnings growth look like? Ultimately, people will come for earnings growth.
Absolutely.
And we have had 5 quarters of single-digit, at least if you look at the Nifty EPS growth. What's your sense about end of the year? People are predicting 13%.
13-14%.
Yeah.
If that looks achievable, Lata. If FMCG and all contribute, it's achievable. And if that has to happen, maybe this is the last phase of massive FI selling, because the rupee will also, as you rightly
become
pointed
cheaper,
out, so that will help them. And plus, if macros improve, in terms of macro, I mean earnings improve, you're going to see a bit of FI money coming back. But at this point in time, they have enough opportunity globally, everywhere else to invest money.
I just want to get Surabhi into this as well, because she's been looking at the FI flows also, and that's something that we've been talking about. In fact, it takes me back to the conversation that we had with the DPAM secretary, where he virtually thanked domestic institutions and retail investors for coming to the rescue of the Indian stock markets. And we've been talking about the Atmanirbhar angle playing out for the stock markets as well, driven by DII and retail investors. But Surabhi, what is going on really there as far as FI flows are concerned? And to Lata's point, the return, so to speak.
Yeah, Shireen, it's very simple. FII money is finding better homes, even if they're temporary homes elsewhere. Markets which are relatively cheaper, which are showing better earnings potential, and which have a AI/tech story. Yeah. It's as simple as that. Now, those are the reasons, and then therefore, here are the numbers. And frankly, numbers as of now, last 2-3 months aren't even that bad. Let's just jog memory here. I'm first talking about the India depository data, and then we'll compare it with other emerging markets. When the year started, it was on a really bad note. I mean, we had $9 billion, $10 billion kind of outflows in January. February, it came down. Then it got a little better. Actually, when the tariffs hit us, those months were positive. If you look at April and May and June, those months were positive. Why? Because the hope was, India is a local-driven economy, and we have a great relationship with the US, and we'll be the first in the queue to get a deal. None of that played out, and as that became clear, the outflow started again, because here earnings were not picking up. There was no deal happening, and the FBIs knew that they had to head back to other markets like Taiwan, South Korea, and of course mainland China. Now the outflows: July $2 billion, August $4 billion, September so far only $1.3 billion. But the fact is, the market is absolutely range-bound, and that's where the point on domestic money comes in. Retail money, family offices, And, you know, all this money is absorbing so much supply. We've discussed this on the show earlier, but if it was not for the local flow, this market would have had a very different texture and nature. Now, let me just quickly contrast this with some data that Nimesh and I were discussing in terms of how do we stack up against other emerging markets. Really bad, actually. The next big EM, or one of the BRICS, which comes close, is South Africa. South Africa has seen an outflow of about, this is 12 months data, about $12 billion. We've seen a $21 billion outflow. We've digested it. If you want the silver lining, thanks to domestic flows, we've digested these outflows really well.
Is minus 20.
And South Korea is also minus 20. Yes, South Korea and South Africa.
South Korea market is up 52% YTD.
Yeah. Okay. May I introduce the? Let me introduce that point, which you know, probably speaks to your earnings issue also, Shireen. The nominal GDP in the country is expected to grow by only maybe 8.5%. And that has a terrible bearing on tax collections, because tax collections are directly correlated to likewise earnings, corporate earnings. So that is a bit of a wet blanket on the whole thing. And the second wet blanket is we are not the only ones in this boat. There is a severe demand anemia in many Asian countries. You know, exports is not a big business. Some of them are, or many of them are export-oriented. So that angle is not open to them. Domestic, you know, why do you think we have a 2% inflation? Because all over Asia, there is deflation. And there is huge Chinese dumping. Indonesia is like what we were during taper tantrum. It's once again in that fragile, whatever, now it is not 5, it's probably fragile 1 or fragile 2. It is as bad as that. And Thailand is not much better. And Malaysia is a very close third. So, you know, we have a pan-Asian problem of deflation and demand. And we have this, therefore, because of low inflation, a poor nominal GDP growth. We have to keep that in context when we expect growth.
But they also need to remember that once this 25% penalty is removed, assuming there is a deal, it automatically improves.
That assumption has been on from April. So, yeah.
No.
I mean, one second. The assumption that the 25% will go because there is a deal is also, that's an assumption.
That's what
Nowhere has Trump stated that the 25% will go, the additional 25% will go if there is a BTA. Let's hope that is the case. In fact, the Indian position has been that, you know, for the BTA to go through, the 25% has to go. And as I pointed out, the Commerce Minister is still there, so let's keep our eyes
the moment
on what
that goes, there will be a
US.
huge sentimental boost to the earnings estimates. The estimates will change significantly because of that penalty alone. And if you are able to settle that remaining 25 at 21, 22 or 19, then this whole conversation will change very significantly.
We keep, this is, sorry, not maybe I'm going off tangent, but if they had this point that and I say it all the time as well, if domestic investors,
retail investors.
Yeah, if the domestic flow was not there, imagine where the market would have been. But it's kind of
chicken. Imagine, even FIs can't exit.
No, 1 minute. My point is, it is chicken and egg, right?
Chicken and egg.
Question to ask is, would there have been all this foreign selling? What came first?
Chicken and egg.
The foreign selling would not have come if there was not this huge, massive retail inflow, right?
I mean,
so this induced that, right? In a way.
So, no, true. When they found valuations extended.
So today, India has become the most liquid market. You ask all the bankers, this is the one phrase that they'll say, that India has become the best liquid market. Whatever you want to sell, how much you want to sell, so actually, without a big impact, it's getting sold.
So the thing is, what came first in a way is this, it started during COVID, right?
COVID, of course.
The massive inflow, financialization of savings, and that has led to markets at all these levels.
Well, imagine when foreign investors come back and all these stock prices surge, then 2 years later we have another wealth effect coming.
So, to that point, and Sriram, what you said, so I think a lot in the market are waiting for just that one trigger, what you said. I mean, something positive on the US
A whistle from Washington is what I'm calling it.
Earnings estimates for the next year, FY27, are still looking very solid. Everyone's saying at least 13-14%. Your GST impact full year will flow through, and rural recovery, and maybe a US-India deal breakthrough. And once that tap turns, we know what momentum does to the market.
40-45% rally in Korea, 20% rally in China. Ours is a 5% rally. So two things, right? Both the stock market and the rupee was overvalued at the end of November last year.
By the way, we are at 23 times earnings. We are still the most expensive emerging market in the world, still. even after all this correction.
Maybe the earnings estimates are very low, is what I'm saying. See,
very wrong.
This is a common, what do you call it?
That is a little difficult to take at this juncture.
The common refrain is that earnings are not below or above estimates, the analysts were wrong.
My only point is characterization that, दरवाजा बंद है, दरवाजा खुलते ऐसे भाग के आएंगे लोग.
ऐसा नहीं होगा.
No, I think, Sriram, we have to be cautious that earnings estimates, given the way nominal GDP is growing, an upside surprise looks a little difficult. And the second thing we should...
No, I think that's why market's also flat, right? I mean, market is ultimately supreme. Now, they know that the earnings are not coming for the last 3 quarters. They're hoping for the earnings to come in the next 2 quarters. So I guess market will...
अभी ऐसा है जब आएगा तब पैसा लगाएंगे. That psyche seems to be playing.
And the second...
Coming back to the rupee, guys, coming back to the rupee because we are out of time. Sriram, let's talk about the big C, competitiveness, and we alluded to that, but you put the data together on what this actually means or how it helps India's competitiveness in this challenging environment with that 50% tariff hit.
No, so yes, you already said it, right? I mean, the rupee weakness offsets some of the tariff blow. Even on competitive terms, so for example, let's take the example of South Africa. They had a 20% advantage over us in terms of tariff. Their tariff was 30%, ours is 50%. But their currency has appreciated 10%. So they have already lost half the advantage. And we have lost another 3-4%. So the net effect is much lesser.
Yeah, instead of 30% disadvantage, it's a 15%.
It's a much lesser. In fact, instead of 20, it's about 5 or 6.
Fair
in the case of Brazil, both are at 50% tariff. Their currency has appreciated 16-17%, which means we are more competitive than Brazil in many product segments. Now, how much of that overlap will differ from one country to another? But the part of the correction was overdue. At the end of November last year, rupee was considered overvalued. And so a 4% correction from there, some would say that it was par for the course, right? That is one. Yes, at the current level, the 89.90 sounds scary. But, and it also helps us with the negotiations to a certain extent. I know Lata ma'am and I had this conversation yesterday about this. And I think that what happens is if Trump wants us to appreciate our currency, it's better to start at 89 or 90 than to start at 84 or 85. So by the time the appreciation, whatever we reach, we are still competitive in the market. But Lata ma'am thinks that,
All said and done, I really want to say that we shouldn't concentrate on exports. It's a very small part of our GDP. The real advantage of a weak rupee is that domestic industry gets a huge tariff wall. I expect growth with a weak rupee because of domestic industry, not because of our export industry. Because Indian exporters don't have that, rare earth advantage. If you will not bring down your garment price down, Vietnam will do. Contracts are set, prices are set ahead of the delivery. So we must not make too much of an export advantage for our currency because it is all contracted.
So
the real advantage clearly is for domestic industry. If domestic industry is gung-ho today, it is in areas where import competition is
there.
Lessened.
The point is that
Sriram, very quickly, we're totally out of time in exactly 5 seconds.
Yeah. The point is that the exports are the most vulnerable segment.
Yes.
So therefore they need the focus. Not because exports growth is necessary. They need to be protected. Let the currency protect them.
Shirin, just 5 seconds. I'll just But I want to say that for new money, right, new foreign money which comes in, if the rupee goes down a little bit more, a foreign investor coming in now is starting with a 3.5-4% advantage. Cheaper. Because when you take the dollar out, right, you're starting with that.
Easily.
So I just want to give a slightly pause. आपके 5 seconds.
No. मेरा 5 seconds यही था. Because it's a show on rupee. A word from internal governor. What to expect, ma'am, on the next policy?
Actually, the street is split down the middle. And I think a rate cut
Only because the rupee is...
Because of the rupee, you wonder. But, as Prashant said from the start, we are not a country which attracts money for interest rate differential. Therefore, I would think that he will give the market a leg up and go ahead and cut. The market is equally divided.
This should be the...
I would tilt in favor of...
That's the consensus. That was the consensus in industry as well, that we will see the MPC deliver with another rate cut. Mere 5 seconds, I'm only ruining the fact that I possess no gold, and mere kismat mein to Paytm gold coin bhi nahi aaya. That's my 5 seconds of...
Go out and spend.
Gold is passé, now it is silver.
Silver is the new gold. So
And my
I
5
know,
seconds
silver's the
are...
new gold. Maybe I stand a chance with that. Maybe I stand a chance with that. But guys, it's been fun talking rupee rates and relations. But thanks very much for joining us here on the Editor's Playbook. To all our viewers, we'd love to hear from you. Send us your feedback, suggestions, comments. Till next week, from all of us here, goodbye and many thanks for watching.